these ones are actually better. Why? Because as you can see, it doesn't repaint, right? So if we move the charts, the position where the MACD was over here, it doesn't change when we move the charts, right? So this actually gives you a chance to backtest and see when it worked, when it didn't, and all that, right? So how do you use the MACD, right? So first of all, the MACD actually shows you the trend. It confirms the trend, or where which trades you are supposed to be looking on the time, which trades or positions you are supposed to be entering on the time frame that you are on. Right? So when these histogram bars over here, right, when these small histogram bars are above the level zero, like this level zero over here, this shows you that you have to what, to be looking for your buying opportunities, right? So when these bars are above the level zero, right, we are supposed to be looking for our buying opportunities, right? And when the, let me check where there's what, where the market is in a what, in a downtrend. When the bars are in a what, in a below the level zero over here, like this over here, you're supposed to be looking only for your what, for your selling opportunities, right? So this is actually how you use the MACD to show you what, show you the trend. Unlike this over here, yeah, it crossed over here. It's actually the same, but when are we going to be getting an entry? It doesn't confirm where to get an entry, right? So when you're using the MACD, when you're trading with the trend, you can actually get your further entries when the MACD over here crosses this red and this black line over here. When they cross, you can actually add more positions to the downside to further aid what your trade. Though it doesn't work all the time, right? Like this over here. Over here, we could have been entering for ourselves over here. Though we went a little bit in profit, but the market actually eventually reversed against us, right? So right over here, this is another advantage of the MACD over the payapa over here, right? So right over here, as you can see, I'm sure you know what divergence is, right? But over here, right, or as you can see, let me just show you, let me draw this small trend line over here. And so right over here, you see the trend line, this trend line over here, and then let me show you what the difference is on the moving averages and on the market, on the main chart and the indicator window, the MACD. Right, so over here, as you can see at this point over here, this correlates with this what, this point over here. This is the same point, right? So on the main chart over here, you can see that the candlestick created what, a lower low. The moving averages, they just copy what the market is doing, right? They also created what, a lower low, but over here, this MACD over here, it created what, a higher high, right? So this is what we call what, divergence, right? So divergence actually shows you that the market can actually reverse at any point, right? So you have to be careful which trades. So you have to be careful which trades you are looking for. Why?